For this week's Yahoo U, we are diving in on a topic we talk a lot about here at Yahoo Finance. That is blank check companies. More than 200 firms use it as a vehicle to go public last year alone. But what exactly is a SPAC? Brian Cheung here to break it down for us. And Brian, you know what's interesting here is just how many people are getting in on the SPAC play. Sir Richard Branson, Shaq is an advisor to one, House Speaker Paul Ryan, or former House Speaker Paul Ryan, also involved. I mean, this really runs the gamut.
I mean, it seems like at this point, if you're a celebrity, you're going to have a SPAC at some point. But let's get right into it. Class is in session. What exactly is a SPAC? Well, it stands for Special Purpose Acquisition Company, or more casually, blank check companies. And the idea is that you give me a bunch of money and then I go out into the market and I spend it on whatever company I like. Now, SPACs have been around for a while. This is not new, but with the stock market on a tear and the companies valuing certainty when raising capital, they become really popular. But what exactly is it and how does it work? Well, let me take you through some slides here that just kind of illustrate a broad idea through an example, okay? So let's say, for example, there's a company called Cheung Shoes, and we make shoes, right? So let's start off with the idea of an IPO. Let's put aside the SPAC for a quick second. And I want to go public. And the way that this process usually works is that I have to find an investment bank, and then I go on the roadshow and talk to all these companies and investors like Zach Guzman, for example. And I say, hey, you should invest in my company. Okay, I do this spiel 900 times over and over and over again across the country. An underwriter is going to help me figure out, based on the demand, how I can price these shares. I sell them, and then I pocket the new capital. But this is a long process, as you can see, right? I have to pitch my company over and over and over again to all these randos who don't even know me. Now, what if I could raise the money, though, and go public, but only deal with one shop, one person, right? One place where I can get the certainty that my stock is going to sell for X amount of money. But who? Well, hold on to that thought. Then comes along Akiko Fujita, right? Okay, she's an accomplished financier. You can see the resume here. She's been at some of the best private equity firms and investment banks out there. She's a partner at a massive PE firm, makes like $9 kajillion in fees as the head of whatever. She's got so much experience in buying companies, merging companies, everything, that people have been saying, you know, Akiko, I would trust you to use my money to snatch up any company that you want because you're that good at managing. But what she's going to do is she's going to say, you know what, I'm even more confident than that. I'm going to start up my own blank check company. So she's going to incorporate her own company. This is the SPAC. And she's going to file an S1 with the SEC. And this SPAC, let's call it the Akiko Special Acquisition Retail Business thing, whatever. Oftentimes, these SPACs will have broad target industries. So in this case, let's say, for example, Akiko is targeting retail, fashion, sneakers, what have you. Now, Akiko still has to go through all the regular IPO hoops like any other company to raise capital with the SPAC. But again, her pitch is, I'm Akiko Fujita. So she's going to raise $400 million. This is just an example in the IPO, right? Now, then she goes on the hunt. So she finds me. We have a meeting and she goes, you know what? I really like Cheung Shoes, but the problem, it's worth $3 billion. She doesn't have enough capital for that at the moment. So she's going to have to find financing elsewhere through private placements with other firms. She might have to issue some debt, but she's eventually going to whip together all the money that she needs so that, again, I don't have to go on the roadshow. Then she's going to come back and say, Brian, I found all the money. And if I say, okay, well, then it's a done deal. The SPAC, and this is the final step, it's the switcheroo. The SPAC that was listed publicly switches and it becomes Cheung Shoes, which is a publicly listed company. So this trend is becoming massive, right? This data comes from Renaissance Capital, and the data is that SPACs in the year 2020 raised $75.5 billion. That's 6 times more than in 2019. So again, this has existed for a while, but it's really exploded last year. So the question is, why 2020? Well, it was a year with unbelievable market volatility, as we know. And again, the idea behind this is to have the certainty of being able to get pricing. That way you don't have to go on a roadshow where if you're trying to sell to someone on a Monday, the price might be different than on a Tuesday because they aren't willing to spend that much. So again, the question here is, why let the SPACs raise the money themselves and then partner with one entity and get your money? That seems like a better route for a lot of these companies. That's why it's so popular. And that is this week's Yahoo U. Class is dismissed.
Yeah, there's just a couple points I'd add to that one too, Brian. One, I think you're underselling my resume. Number two, relative to the other point why we're seeing so many people add on to this SPAC boom, right? Is that if Akiko went through with this too, in your example, there's a lot of kickbacks in terms of warrants and perks to go this route for the sponsor, right? To go out and find a company. And I wonder how much that might add to the idea that we're seeing some companies out there that maybe shouldn't be going public via SPAC, sponsors tapping them because there is an incentive there for them to do so, right?
Yeah, absolutely. And I think that we have to remember that there are banks that are kind of part of this process too. So they still win out of all of this whole process.
Yeah. Okay.
I have to say, Brian, there's been a number of scenarios on Yahoo U where I have become a cajillionaire. I think we need to talk after this because I'm looking for some tips. That has not materialized in real life, but that's why we watch Yahoo U.
Weirdly, everyone's
right.
a millionaire when they invest in Cheung shoes. That's the other thing I've noticed. All right, we're gonna